You guys ready to go? Another big day today. All right, let's get going. Yeah, I'll just cut it. Boom! Hard cut. Good morning, everybody. How are you? Happy Friday. We got some big news coming out any moment. Let me bring that up, in fact, just so I have it on my mind. My mind on my money and my money on my mind. The thing that I always do is gone. Anyways, I'll have to figure that out later. Let me move that over. All right, too many windows open. Good morning. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance to try to lower our risk, lower our volatility, increase our consistent returns. Now, why would we want to try to do all of that? Well, because trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Good morning. Another busy day. I want to talk about the Bank of Japan, but we have big data coming out in less than a half hour, really pretty close to about 20 minutes. So I guess we got to focus on that. And then maybe after that, we could discuss the Bank of Japan. Cool. Next week, we got ECB and FED all lined up. Is BOE next week as well, or the week after? I don't remember. But anyways, we got a lot to do. There's a lot of work to be done. But what an interesting life we lead. So thank you for being part of the Forex.Today YouTube community. Thank you for being a subscriber. Thank you for clicking the like button. Thank you for leaving comments. Now, when I mean leave a comment, I mean on the recording. And what you should probably do, if I actually say something intelligent, you should probably write down the time, write down the note of what was said, and then document that in the comment section. So later on in life, if we talk about super core inflation, and you're like, oh yeah, that's that new thing. Yeah. So you write it down, super core inflation at this point in this video. Well, you can search your YouTube comments and pull up this exact video in the exact time I talk about it. So in a year, you might want to revisit the idea of what the heck is supercore. As an example. And you can customize your learning experience here at Forex.Today. Tailor-made to you on demand. Remember, it's not just a daily live stream, but a repository of knowledge. Thank you, Denise. Yeah, what I couldn't remember was the BOE stuff. When's England going to do theirs? And I guess it's the following week, huh? But anywho, is it 5:11? Thank you. So another great morning. Now, speaking about the recording, if you look under the video, there's links, lots of cool links. One of them is to my book. Another is to FX Bootcamp for training, video training, live training, all that kind of stuff. Great. There's a link to actually this page, 3 trading secrets that may triple your profits without changing your indicators and while spending less time in front of your charts. Now, one of the reasons you might want to watch at least the first half of this is I show you how I first started trading. Back in the old days, way back in the old days, I show you my first trading strategy. And you might be interested in that. It was actually quantitative. Check it out. You might be interested and it might be helpful. A lot of things are covered in there, like a lot. Cool. There's a sales pitch at the end, but if you don't want to stay to the end, don't stay to the end, whatever. It's still useful information. Okay. Oh yeah. And I show you how to do all that for free. So that's right. I forgot that part. So even if you like everything on here and you're like, I want to incorporate all this knowledge into my trading. Cool, man. That's all I'm trying to do. Okay. So anyways, that link is in the description below. I think that's the right page, or is that the preview page? The link is in the description below. No, that looks like that'll do. It's got a tracking link on it. Okay, cool. There's a link to tradersway.com. You want a broker? Do you want one that's trustworthy, has an ethical business model, has fast execution speed, narrow spreads, huge swaps, and my recommendation? Cool. Hopefully that piques your curiosity and you're like, you know what, maybe I should go check out that Traders Way. Yeah, go check them out. Do your own due diligence. But they earned my loyalty and respect in the duress of the real world. When the markets were crashing, Traders Way was stable. And I appreciate that. That was a turning point. That was amazing. I'll never forget it. So anyways, here we are, Traders Way. All these years later, 8 years later, I recommend them. You should go check them out. Favor says, you're a big bear on gold. Okay, why? Now, don't let me forget. I got to do this other thing. Hang on. Link. Wrong link. Oh, this one might do. Hang on. Let me just tee up the news coming out in 20 minutes before I get into answering questions. Hang on. I can't do two things at once. I can barely do one thing at once. I just want the news going. I'll have to mute that, pop that, and put that over there so I keep seeing it. Okay, cool. All right, so get back here. Gold. Okay, why would you be a bear on gold? Okay, I suppose your narrative is we're going into recession. And that's disinflationary, and you're selling it. Cool. Then I would agree with you, if that's your point of view. And you can see we're below the bands, okay, below the ribbon. So you could sell lower highs, lower highs, lower highs. And we just did one. You can see that. So, I got to get my drawing tool. Okay, and don't let me forget about talking about. Don't let me forget about the Bank of Japan. We need to talk about that, but I don't think now's the time. I'll get too distracted. But anyways, there's sort of a plan A and a plan B for a bear. It's not a great plan because you're really range bound here, but it is a plan. Now, if that's your plan, Favor, you're also telling me that the Fed's going to communicate to us that there's no pause coming. Jay Powell says, we have not discussed a pause in June. They haven't even discussed it. You understand? We find that out on May 3rd. They're like, pause? Well, yeah, that might be appropriate soon, but we haven't discussed it yet. Boom. There you go. Easy. If you understand the fundamentals, that's right? Yeah, that's easy. Sold at the top of that band. Okay. Congrats. Okay, big day in the S&P 500. Okay, it may look like this now. If you're a bear, you have permission. If you're a bear, bring it downtown. I know you're an uptown girl, but this might be going downtown, man. Back to the pivot, back to the pivot. Point. What do you guys think about that? We're going to have a 1.1 GDP with rising inflation. See, one of the things that probably isn't talked about enough about, is that last year we had high inflation, and now we have falling inflation, what we call disinflation. But what will eventually happen is this year, so imagine we're comparing 2023 versus 2022. And in 2022, at parts of 2022, we had very high inflation, and then it peaked, and then peak inflation from 10%, and then started coming down, right? So you have low versus high, basically. But at some point, as we move through the year, we're going to be comparing low versus lower. Let's not do it that way. Let me change this. Let's just say we have 5% inflation, and we're comparing now with a year ago, in which we might have had 10% inflation. Then a month goes by, and we stay around 5, but we're comparing it to now inflation in 2022 when it was 9%. And then another goes by, and we're comparing now, once again, we stay at 5, but now it's 8. And then throughout the year, 7, 6, and then 5. And we get, the numbers because we're comparing, which is called a base effect. It might show improvement until we're doing 5 versus 5, and then there's no more improvement. Like sometimes the math is interesting. So anyways, we're going to start comparing falling base numbers to stable headline numbers, let's say. And so anyways, the rate of change and all that kind of stuff is going to start changing. It'll be very interesting how that impacts us next year. So anyways, anywho, there might be an up and down today, huh? Okay, we're about 9 minutes away from the news. Let me open up another page. Hang on. Let me do this. Ba 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 ba. And I guess this is kind of what I'm talking about. where we had 5.7, then it fell to 5.3, and then we fell to or stayed at 5.3, and then we dropped to 5.0. So it's right. It's going to be interesting what it comes out to. But remember, we're talking about change, right? Be interesting to see as these numbers fall how it impacts our current levels. Because remember, it's comparison is what I'm trying to say. It's comparison. Inflation now versus a year ago. But if a year ago it was improving, then there's less change now. Yeah, we'll get to BOJ after this news, okay? Did you guys watch my YouTube video on Supercore? It's assumed that you know that. I'll never look at let's do Supercore. I'll never look into your eyes again. This one. Supercore. Now it's CPI. Today we're doing PCE. Now is expected to be at 5.2, catching up with Canada. So that kind of makes sense, doesn't it? It's the same, only different. Make sure you watch that. Put that on your to-do list. Cool. I'll never look into your eyes again. So, very neato. I'll hit the refresh in a bit. Let me move that over there so I don't lose it. Okay, so anyways, that's one cool plan. Look at Bitcoin. If you're bullish on Bitcoin, we already have this, what would you call it, 29-ish as a buy zone. Okay, that's risk on if you're a buyer, so that means you think the stock market's going up. Cool. My WTI. Okay, notice that we have completed the gap fill recently. And what you want to pay attention to is, can we get back above the gap? And if so, you would have permission to engage. You shouldn't be in a business of buying lower lows, but you can buy a higher low. So wouldn't that be interesting if between now and next week you get this up, okay, but that just gets us to here, then down, but that gets us to there, and then you see this, maybe a Tuesday's day trade, it starts to go up right off that line. Tiny little arrow. And you're like, boom, 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 boom. Boom, boom, boom. Boom, boom, boom. Okay. Because I believe there's still backwardation, isn't there? Isn't there still backwardation in this market? Where, let's just say oil today is 75 bucks and you need some oil. And so you're like, okay, send me some oil, but I don't want it till September. So what would you charge me to take some of this $75 oil, put it in storage for several months, and then deliver it to me in September? And they might say, we'll charge you $73 for that. And you're like, wait, what? You're going to put it in storage for several months? And then on top of that, give me a discount? They're like, no. That's not the way to look at it. This oil should be worth 72, but you're paying 75 because, well, a lot of people want it now. They can't wait to September. They don't have any in their supply, so they need it now. There's a shortage of oil now, is one idea. Okay, it's one way of looking at it. Or if you could wait for a delivery, you get a discount. It's sort of the same, but really it means you can't wait, you need it now. Thank you. So, right? It really depends on how today goes. PCE on top of GDP. If, slowing growth, but, inflation going back up forces the Fed's hand. And then, it all depends. Maybe it's not so bad and the Fed can pause. And, really, it really depends. And it all depends on how this information is interpreted by the Fed, not by the market, by the Fed, because the market could be wrong. The market's guessing what the Fed will do. And they're being very emotional because I don't agree with their logic. Therefore, the way the market's pricing things in, it probably isn't completely logic. There's probably a lot of fear involved or hope, right? Fear of missing out. All kinds of interesting, non-logical things going on. And by non-logical, I say the chairman of the board, the Board of Governors and the Federal Open Market Committee that sets interest rates says they're not going to cut interest rates this year at all. For sure. Not. Ain't going to happen. Then you look at the market and they're like, oh, so there's 3 cuts. And I'm like, no, Jay Powell just said no cuts. Oh, so we're going to price in 3 cuts. Well, what the heck? Why would you do that? Oh, well, the markets are going to crash. The end of the world's going to come. There will be another zombie apocalypse. Fed will be forced to cut interest rates to save our souls. And like, whoa, dude. Whoa. A little bit emotional, huh? So, yeah. So I can't wait to see what's going on the May 3rd, huh? Okay, here we go. Breaking news. Burp, burp, burp. Let's look at this on a euro buck. Just for fun. I'll never look into your eyes again. Huh? So let me. Website isn't updated yet. Interesting. It's not updated yet. This happened. They were slow a while ago. Last thing. BEA is slow on updating their website. Interesting. So employment is up. Like the wages are up on this PCE. Okay. What else can I get you? I don't have the report yet. It's still, the website's not updated yet. Look, next release today. Current release a month ago. So still waiting. Shame on them. Core is as expected. Okay. Now what we want is a super core number. Does anybody have a super core number? So core is as expected, so that's not terrible. So that's what this is about. So an upward move is risk on, not risk off. Still, no. Is it just this page? It can't be. No, I'm on the right page. Huh. So 4.6 year over year versus 4.5. So we're below 5.0. So 4.6 ain't bad, huh? People are hoping for a little more, but, well, that's dumb. Okay. It's funny, as I'm reading things out, you guys are cutting and pasting and posting, which is me. We're all kind of doing the same thing, which is good. Right? Right. So I even just said it, Darko, right? 4.6 versus 4.5. So, we were at 5.0, 4 or 5 months ago, we were at 6, and now we're at 4.5. Not bad, right? It's improving. It's disinflationary. Still don't have the report. I'm going to go to the home page and see if it forces something. Yeah, wow, that's it. Boy, I had to go reverse engineer it. Weird. Okay. So anyways, yeah. See, 4.8, 4.6, 4.7, 4.7, 4.6. Okay. Stable, huh? I'd say that's pretty stable, actually, but not necessarily improving dramatically, right? But look at this on the headline. 5.7, 5.3, 5.4, 5.1, 4.2. What's happening there? Okay. Oil's down. Okay. Right? Interesting, right? Cool. So right now that trend is still happening. And going to take a look at how commodities react. What is one reason gold is not up? Well, the first part of what we're looking at, and I just showed you, there's a decrease in headline inflation. So let's go back. Let's go back. Okay. 5.7, 5.5, 5.0, less than 4.5. Like you could see, that's disinflationary, right? That's inflation falling, right? And that's disinflationary, so you don't need to hedge it with gold, is one way of looking at it, right? Family Time says, kindly share your knowledge on employment cost index. Well, just consider it wage. Okay, if wages go up, household income goes up, spending goes up, demand goes up, supply goes down, and you're left with higher prices, which is inflationary, so the Fed raises interest rates. Okay, that's how you'd look at that, Family Time. Okay. Okay, look how they chain this. Here's the numbers in dollars today. And here's the numbers in 2012 dollars. Yeah. Value of the dollar's fallen over those 10 years. The increase in current dollar personal income, okay, so today's dollars, primarily reflected increases in the composition, personal income receipts on assets, rental income of persons that were partially offset by decreases in oh my God. Getting esoteric here. $45 billion increase in spending for services. Okay? So you're taking that stimulus money this year and you're going on vacation because you've put off that Disney trip for a couple of years. When there was COVID and you couldn't travel, you spent it all on Amazon.com. So you long Disney and you short Amazon. Nah, whoa. I didn't just say that. But you get the idea that you couldn't spend on services, so you spent it on stuff. Now, you're not spending it on stuff. You're spending it on services. But just imagine you're like, oh my God, a $40 billion decrease in goods. Yeah, well, relative to the last year and the year before, that's probably, even with that decrease, it's probably still higher than average. So if you looked at like the 10-year average, we're probably, I'm guessing, if there's still stimulus if stimulus money, people are still going to buy crap. They still have free money, so they're still going to buy stuff, but not the same amount of stuff when you had to build a home office. So you went to Amazon.com. You bought an HP computer and an HP printer. You bought a desk and a lamp. Okay? And now you don't need that stuff. So you're not buying more. You're not buying another computer. Did you know the purchase of personal computers and laptops right now, it doesn't matter if you're Apple, HP, doesn't matter who you are, down at least 40%. So that's reflected here. You bought new computers during COVID, build a home office. Now you don't need it, but you're like, I'm going to take my brats to Disneyland and stand in line for hours and hours and hours and pay way too much for the privilege. Right? I'm an economist. And I'm really shocked. Disney is one of those things, like I'm always interested in companies that can charge way too much for something. And people are standing in line to do it. Right? You know, there's great examples, like Tiffany's is a great company. But people, what is Tiffany? Why is Tiffany's, why is the brand Tiffany's? If you go to a Tiffany's store, why is it so amazing? Because you can get the highest quality diamonds in the world. But you got to drop $400K. But where do they make their money? People go in there, they look at the $400,000 diamond and they're like, honey, look at this. And she's like, oh my God, I'd do anything for that. And then he walks over and says, how much is this silver bracelet? It's sterling silver. In Mexico, it'd be $12. Well, that's only $450. Oh, well, I'll get that for you, honey. Right? It's amazing. It's amazing, right? It's great. But Disney is one of those where my personal experience was Going to the fancy some sort of garden restaurant where you're in the glass atrium and they're serving tea, like it's proper. It's a proper place, right? And I knew the prices because I reserved the table. I think there were 6 or 7 or 8 of us. And so I reserved a whole private table and everything. Great. And then Disney is great where they're like, do you want to upgrade for the better sandwiches? I'm like, dude, for $900, I get shitty sandwiches. Why can't you just give me good sandwiches? No, well, for another $400, you can have better quality sandwiches. No, we're fine with the $900 sandwiches. Next. And they're like, would you like a pedophile to show up wearing a mouse suit and like hug your children so you can take pictures? I'm like, well, what's that going to cost? Well, that's only another $1,200. Like $1,200 to get a selfie with a rat? You're kidding me. Right? And so anyway, so I'm going through this. I'm like, no, skip that bullshit. And, skip that. And so now you're having lunch with your kids and you're dropping like $1,000, $1,000 freaking dollars, but you had to pay $1,000 to get into the park, right? And then so anyway, so I feel like a baller, right? Like I'm rolling off my private jet, getting into the Bentley, and we're gonna go have $1,000 lunch because money's no object for my kids, right? And I get there, look. Most of the people in the restaurant, how do you say it? There's no way of saying it properly, but they don't look rich. Right? They don't look rich. I don't know how much money they make. I don't know. And I'm biased and whatever. You can say all the bad things you want, but they don't look like billionaires, right? They look like average people. Could be a bricklayer, could be a concrete guy or whatever, like just regular folk. They're not wearing $1,000 watches and $900 shoes. They just look like average everyday people. Lower middle class is what it looks. So I don't know, maybe they're well off. But I look around and they all ordered the upgraded sandwiches and they all ordered the let a stranger hug your children in a rat suit. They all paid it. And all of a sudden I'm calculating. I'm like, these guys spent $3,000 on lunch. And these guys spent $3,000 on lunch. And these guys, and these guys, and these guys. And I'm like, holy crap. Right? Right, Rookie? Billionaires always want to keep a low profile. Honestly, and Warren Buffett says all this crap. Like, look, I don't believe a word Warren Buffett says, honestly. I think he's a ruthless son of a gun, but he knows what he's doing. And people love him. They love him. And people love Elon Musk and people love Steve Jobs. Steve Jobs was an asshole. Warren Buffett's an asshole. Anyways, I do know people with a lot of money, and oh my God, they live another level of lifestyle that you've never even seen, heard of. Low profile? That's nonsense. It's nonsense. When you low profile, there's an entire universe you've probably have never seen. A way of living, a way of networking, and another way of doing business, there's another economy of money. Like these guys are like, at some level, like making $20 million is just something you did last month on a transaction. You did a deal with your buddy and you picked up 20M and it wasn't even a thing. Where you're like, an average person doesn't make 20 million in their entire lifetime. But for other people, it's just a handshake with a buddy. And very often, real money is not even involved. It's just a contract. And you're like, okay, well, my banker will talk to your banker, and this guy will do that. We'll write it up and draft it great, and all my staff will do it great. Meanwhile, you're just sipping champagne on a yacht. The deal gets done. Other people do all the work. It's other people's money, meaning it might just be the bank's money. The bank puts up money, but they want to make the transaction fee. They want to make their clients happy. Bada bing, bada boom, 20 million's left over. You're done. And it wasn't even a thought. There's another world. The low profile thing, they just don't live in our world. There's an entire other universe. It's really, and Europeans know this more than Americans. Like when you go to London, people that have that kind of money, and it's changed more, it's changed over the last 25 years, but over the last 200 years, for example, if you were wealthy and living in England, there was a whole nother universe. You didn't eat at the same restaurants. You didn't go to the same places. You were members of 5 or 6 or 7 different clubs or societies, and there's private hotels and private restaurants and private functions, and like you barely even stepped out onto the street. Okay. So like, for example, and there are rules trucking. I'm sort of kind of loosely invited to an event in Monaco coming up, and it'll be filled with billionaires. Now, I'm not a billionaire, so they might ask me to refill their champagne. I'm like, no, I'm a guest too. I'm actually a friend of a friend of a friend, but I don't work here. They're gonna look at me like the help. But nonetheless, they're all billionaires. And they all do business with each other. It's kind of like that's what you're there for. But there is a formal rule. You're not allowed to talk business. But the thing is, everybody in the room is vetted. You see what I mean? So if you're there and you're watching the Formula One race, which you kind of are there for, but you kind of not, and whether you're in the private gallery, the private party, the private hotel, or you're on the private yacht, you just mingle with people and everyone's dressed casually. No one, but your casual outfit is expensive, right? So I'll be doing my best to roll with these guys. But the thing is, when you strike up a conversation, you don't talk business, but you might develop a friendship, right? And so later on, you follow up, and they're like, "Hey, you're cool, man. It was great hanging with you. I want to put you in on this deal." Boom, done. Like that kind of stuff. But it's another universe. So this idea, like, yeah, there's like a hidden billionaire walking around. I don't know. No, there's just another universe that exists that 99% of people, it's actually less, 99.8% of people never see. Okay, so Trucking Mogul says basically billionaires flex in a way. No, they don't flex at all. That's the thing, like, the difference between having, let's say, I'll just make up a number, 1 billion and 10 billion. You know what the difference is? Nothing. There's no flex. If everybody in the room can have anything they want at any time, there's nothing impressive. Nobody's at that level. It's actually more humble than you would think. People are humble at that level because, oh, you have a $50,000 watch on? Well, I have a $50,000 watch on. So what? And if I wanted a $100,000 watch, I could have it. If I wanted $1 million watch, I could have it, but so could you. Like there's just there. Oh, it's not like they're sitting around. I have 300 Ferraris. Well, I have 500 Ferraris. Well, you can have anything you want, unlimited amounts of it, anytime you want. You don't even need to know the price. Okay, this guy only has a 100-foot yacht, and this guy's got a 150-foot yacht. But at some point, it doesn't really matter. It just doesn't matter. Your car doesn't matter. Your house, these guys have anything they want. How many houses? It doesn't matter how many houses. Like you're in Monaco for let's say not this party, not for the Formula One, but let's say you're in Monaco for the yacht show, and you're there to look at yachts. And you meet a lot of people, and everybody there basically owns at least one yacht. Maybe they're upgrading, maybe they're downgrading, maybe they're changing styles, maybe they're having something custom made. But then while you're there, you're like, look at these beautiful houses. And you're like, nah, I think I'll buy a house. I like that house right there on the hill. How much is it? It doesn't even matter how much is it. Is it 27 million or 37 million? It doesn't matter. And so what I'm trying to get to is there's no flex trucking mogul. It's all irrelevant at that point. So there's more of a lifestyle, a game. There's stuff that keeps you interested and busy. You're usually doing a lot of stuff, so you need a lot of support, whether it's friends helping you finance stuff or introduce you to other people because you need access to stuff. But it's different. That's all I'm saying. It's way, 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 way different. Yeah. You don't, right? So anyways. So it's scary for someone that doesn't have unlimited resources to hang with people that do. It's dangerous, isn't it? I had a buddy who was a friend of a friend at a birthday party. Some other dude was turning 30 or something. And, but he's invited to go, right? So anyway, so they go to this party. They're in New York City. And they're partying like crazy, and the guy rented out the whole club. No, he didn't rent out the whole club. Anyways, they just had like unlimited amounts of, $10,000 bottles of champagne and all that kind of stuff. And my buddy's like, "Oh my God, I can't pay for this." And the guy whose birthday it was, he's like, "Nah, I got it all. And anyway, so it gets to like 2:00 in the morning, and the bar is shutting down, and they're getting kicked out. And he says to everybody, "Hey, you guys want to go to Montreal? The Formula One races tomorrow morning." And they're like, "Yeah, let's go. Let's go to Montreal." So they all pile into the car, right, in the limo or whatever, and they zip out to the airport. They get on this private jet. And now they're flying they're still drinking and having a good time, and they're flying, and they're in his private jet now, flying to Montreal at now 4:00 in the morning. Drinking and partying. The champagne is still flowing. And then they land. Well, my buddy's Canadian, so we're humble, polite people to a fault. And so my buddy's like, "Hey, man, I don't even know you." And you're like, "I'm on your private jet. You're dropping huge money on your party in New York City. Like this is crazy. I want to help pay for this breakfast that we're having," because they were just flying to Montreal for breakfast, right? To be at the Formula One race, but in this little side private area where they serve, right? And so you can have breakfast while the cars are going by. And he's like, "I'd like to chip in." And the guy smiles ear to ear, and he's like, "Oh man, that is so nice of you. I really appreciate it, man. But no, I got this. My buddy's steps forward again. He's like, "No, man, I'd really like to contribute." And the guy kind of shrugs his shoulders and he says, "You know what? Okay, I'll let you pay half of the bar tab." And he's like, "Okay, fair enough, right?" So they're there for like 3 hours, but they're ordering the 3-liter bottles of the pink Dom Perignon. So anyways, they're there for 3 or 4 hours. They have their breakfast. Now they're exhausted. It's time to get in the private jet and fly home. My buddy gets his half of the bar tab, and it's $26,000. And he's like, I don't know if he's thinking in his head, I don't know if I have that amount of credit on my credit card. He's like, I don't know if I got it. His half of the bar tab, not the food tab, not the ticket tab, not the private jet, not the bar tab, just from the Grand Prix bar tab. And he's like, oh my God. So he gave the credit card and he's thinking, what can I do if it bounces? Like, how do I get out of this? And he said it went through. And he's like, it was iffy. It was iffy. Like, he didn't think it would work. So anyways, it goes through and he signs his half of the bar tab, $26,872.11. So like guys like that are dangerous because you're like, dude, did this guy just drop $250,000 on his birthday party? But for him, it would be absolutely nothing. And to a regular Joe, it's incredible. Okay. So those kinds of guys are dangerous because you feel like you're hanging, but you can put yourself out of business real fast. So you got to be careful. So anyways, different world, guys. The thing is to not dream about it. You need to see why they have that kind of wealth and they own something of value. Generally speaking, it creates income and maintains its intrinsic value. So it's like if you owned, okay, you have a rich uncle that dies. And you didn't even know this, but you inherited from your rich uncle a $1 billion skyscraper. I'm trying to do a B. I don't know why it's so hard sometimes. Okay, you own this $1 billion skyscraper. You just got it free and clear. You don't have to pay taxes on it in that scenario because you inherited. So all the money your rich uncle made off of depreciating this building to zero. So he made $1 billion through depreciation. Remember, that's why Trump, his reported net worth is zero. He's like, he doesn't make any money. No, he bought $1 billion building and then over time depreciated it to zero and kept the $1 billion. But it's not income. It's not a distribution. Okay. But anyway, so he's got this $1 billion. You're right. Now you own this $1 billion property. And after rent and expenses, and you own it. So now there's no mortgage and all that kind of stuff. No matter what happens. Okay. Let's say you make, I'll make up a number. You make $10 million a year profit. Now, the value of the building could go to 1.3 or it could fall to 837 million. So it goes up and down and up and down and up and down. And, you know, right? Maybe in down recessions, you lose some of your tenants. So in bad years, you make 8 million. In good years, rents go up. So you make 12. But on the long run, you're just sitting on 10 million. And you do absolutely nothing. So before you start jonesing on a billionaire and their crazy lifestyle of models and bottles and private jets and limousines and fabulous parties, right? Gatsby parties. Focus on how do I start to own assets? Those that focus on spending money never get anywhere. So you're like, whatever they're doing, they own a lot of value. There's some sort of value proposition. If it's not an apartment building or a skyscraper, they own a company. The company produces value. And it produces more value than it charges its customers. So it has customers standing in line, buying this value, whatever the value is. and there's profit left over, and the value of the company goes up and down. So if it's a publicly traded company and you raise $1 billion to an IPO and you own 20% of the company, you're like, boom, I got 200 million. Boom, boom. The value of this property goes up and down. You can refinance and put, $40 million in your pocket and still maintain the 100M, but now there's a small mortgage, but hey, it just comes out of the rent. So you might put 40 billion in your pocket, but because your increased costs and spend, you only make now 8 million a year, but you paid yourself 40 up front. You're like, dude, at some point, because you just own this value creating asset, the idea of money becomes completely an illusion. Yeah, no, we'll get there, guys. So when you're creating your Forex company, you need to be focused on this, building an asset. Okay? So you might say your Forex business, the account's just going to grow and grow and grow and grow, and you're going to have $1 billion fund. You're going to grow your account from $10,000 to $1 billion or something, right? It's mathematically possible, but it doesn't work that way because you end up spending your money. But the interesting thing about Forex is then what you do is you take other people's money, OPM, and you manage that and you charge a fee. Okay? And this is now Forex Incorporated. This is your Forex business. And you're trading other people's money. You're living off this 20%. So that goes to you. 80% of the value you create goes to your clients. That's great. You're living off this 20%, which might be humble. Okay? But your money is in here too. So now this is growing at 100% and you never touch that. So that's compounding by your return. Let's say 20% a year, compounding. But then you're taking this part and you're playing that game well and you're taking out $5,000 a month. $5,000 a month you're taking out that you would have paid in taxes. So this is assuming you're making like 300,000 a year. Okay, great. So you're taking 5% amount. So that's $60,000 a year. And now you're putting that tax free either into that or maybe like the fund that I'm starting. So now that's going to compound, paying 10% income plus, let's say on a good year, 10% in appreciation. And now it's like owning the skyscraper where you have a net asset value, which is the value of the building, NAV, plus you have your income, which is like rent. And now you have this asset growing, which probably doubles every 8 or 9 years. And that's growing and compounding. And you're just reducing your tax bill. And so now you got your Forex money growing like crazy, asset. You have income coming from trading other people's money. And from that, you're able to lower your taxes, but more importantly, build an asset base from your retirement account going into here. So now you have this retirement account compounding like crazy. So every time you move $50,000 or $60,000 in which you would have paid in taxes, by the time you retire, that $50,000 is now $250,000, but that's per year. For 20 years. All of a sudden you're like, dude, you own millions here. Okay? Maybe your Forex account has grown and grown and grown and grown and grown, and you got millions there. And out of this, you, after you've done your tax strategy, you have this, your money now, personal money, in which you bought a home. And that's doubled in value. So you might have $1 million in profit on here. Let's say let's say 2 million here, and let's say 3 million here. And now you've retired and you have 6 million in cash and you don't want to work anymore. And that might be way more money than you ever had while you were working in your young years. But the only way to do it is everything you do turns to a profitable asset. Your car doesn't make you money. Your watch doesn't make you money. Actually, the watches are actually making money right now. But your car doesn't typically make money. Your TV typically doesn't make money. Your vacation doesn't make money. Okay? So you got to think about someone that buys a house where they like to vacation, and then 8 years later they sell their house for a profit. So not only did they get free vacations, but their vacations paid them money. So everything you do should lead to asset appreciation or income increases. Okay? On help, when you make a lot of money or lose a lot of money, it's advantageous to be a corporation. If you're going to be doing this for years and years and years, when you're making decent money, yes, you need to incorporate. So one of the things I'm putting together in my free time is that we're going to do a cruise to the Caribbean. And I'm going to teach you on, just that idea. Probably incorporating offshore if you're American, running and managing hedge funds and the different strategies and an overview of the industry, but have lawyers come in and talk about how to manage your Forex corporation correctly and legally and within compliance, and how this gets reported to the United States and what you can do and what you can't do and how people get into trouble and all that kind of stuff. And then when we land in the Caribbean, the lawyer and their staff starts the process of creating your company and getting your company incorporated, getting your bank, because you got to go through due diligence with the domicile, right? You got to do due diligence with the bank, and then you got to be onboarded and go through due diligence with your broker, right? There's a lot right? And so we get all those things started, and then we have a cocktail party and everything's great. So I'd like to do that this year. All right, let's talk about BOJ. I want to get my notes here. I think I have it here. Okay, so let's go to the BOJ. Now, if you were in the swing trading group last night, we talked about this a lot. So if you're wondering, should I join FX Bootcamp and then upgrade my account to unlock the swing trading group? Is it worth $99 a month? Well, if you look at these charts, your answer is probably yes. Now, you're like, but Wayne, this is pointed down. No. Well, yeah, that's pointed down. This had to do with how to compound scalps. But last night, and I'll switch it to something else. One of the things we did talk about was the Kiwi one, right? Let's just do Euro. I'll just throw that there. Okay. The Bank of Japan. We talked about there's not likely to be a change in yield curve control. Okay, that was the basic premise. And that what could happen, what might happen, is that he says, not now, but by the end of the year, we could. Okay? Now, this was Ueda's first meeting, right? So that's what we talked about. We did not expect a change in the yield curve control, which is their current policy. That would likely weaken the Japanese yen. But he could say, not now, but this is something that we're definitely considering to do soon. And if he said that, that will bring yen strength. Now, there were a lot of people there in this meeting, dozens of us. So call bullshit if I'm not explaining what we did perfectly well. Okay? If I'm backtracking a little bit to look good, call my bluff. If it's bullshit, it's bullshit. But again, not likely a change in yield curve control, but they could say something like it's coming. And if they say it's coming, then I use game theory to explain this. If they say they'll kill it at the end of the year, then you start trading it now. It's game theory. If you know move number 7, you're going to incorporate your strategy in move number 1. You move, they move. You move, they move. But if you already know what move number 7 is, well, you're going to take advantage of that and make your moves now. So if they say we'll do it maybe by the end of the year, boom, you start playing that now, and that brings yen strength. So we went through this in way greater detail than that, but we talked about that would be what determines up or down for these yen pairs. So again, if he says, no, we'll probably change it later this year, yen gets strong. That's it. If he says, we're not going to change yield curve control, the yen gets weak. Okay? So, Japan scrapped their guidance on future interest rate levels. Okay, so they're not even talking about it. They don't want to even talk about interest rates. Okay? And they left the policy the same. The asset purchases they're making unchanged. Okay? Ueda reiterated his commitment to continue easing with yield curve control. What was said about that? What did we discuss? I just told you, but I want you to manifest this. You have to make it real in your life. What did I just say? If yield curve control stays in place, what would happen to the yen? Does the yen get strong or does the yen get weak? Correct. So Governor Ueda reiterated his commitment to continue easing with yield curve control. Okay, so first thing, that would bring yen weakness. Okay. Now, what would make the yen strong? What would then counter that? I just discussed it, but I want you to type it. What would then suddenly make the Japanese yen very strong? And don't say like dovish. No, be specific. Okay, I know you're thinking, you're typing. The thing that would make it strong is he says, well, we're committed to it now, but we are seriously thinking about killing it. Right, you guys are correct. Okay, so now let's address part 2. Okay, so when you take over a central bank, by the way, or a corporation, like this is one of the things I learned in my management degree from Harvard, like how to be a new CEO. It was one of the things we discussed. So anyways, so he's now the CEO of a bank, basically, right? The central bank. So when you take over, you kind of audit everything. You want to know where everything is and what everybody's doing, what all the policies are. You want to get all your ducks in order, right? So you start with a review. You have to. So anyway, so he's starting to review all the policies and procedures in place at the Bank of Japan because now it's his Bank of Japan. Okay? And he says, we're not starting, this is a quote, we're not starting the review with the aim of normalizing. Well, what? They're not even thinking about it. There's not even a discussion. There's not a contingency plan. There isn't a hypothesis in place. They're not reviewing it to see if it's harmful or helpful. We're not starting the review with the aim of normalization. Ooh, wait a sec. Word for word. These are the words out of his mouth. It's not a zero chance we begin normalizing during the period, right? He's like, we're not considering it. It's possible, but we haven't considered it. So he's leaving the door open, which is smart. He's like, dude, we can do whatever we want. We just haven't thought about it. We could, but we're not discussing it. We're not analyzing it. We're not putting models toward it. It just ain't happening. It's not on the radar. So based on everything I taught you, by the way, I taught everybody in the swing trading group last night before all of this happened. Okay? So no change now. Okay? Let me actually get the words again. Commitment to continue easing with yield curve control. That's pretty strong language. Maintaining the commitment to yield curve control, and they're not even thinking about killing it. Yen's weak. That's it. Enough said. That's it. The only interesting thing about it now is, what are you going to do about it? Okay. Okay. What the heck? Oh, this is left over from our discussion yesterday. Oh, no. I actually didn't mean to be long this trade. I was showing how to use enter and exit trades. So I was doing some tactical training yesterday as well. And looks like I accidentally made money. But I sure didn't make money too. Oh, no. But no happy face. You see the mistake here? I'll never look into your eyes again. So I got to put my stop at break even. And your picture will be. So where am I at? What is that? 133? 135. I'll never look into your eyes again. Dude, I'm up 200 pips since last night. I'll never look into your eyes again. Well, I guess that's how you do it then, right? Oh my God. I have 2 more meetings this morning. Have to meet with a hedge fund administrator. I'm so tired. I haven't slept enough. And then I have to meet with a potential investor. All before noon. So I guess I should bid you adieu. Hope you have a wonderful weekend. I need about One more energy drink and 2 more coffees. Oh my God. So, cool. Like, look at this kitty cat, huh? Don't you just love it how it's kicking off that central pivot point? So, I would look at 102, 101 and a half, 101. Why not 101? Haha, thank you, Darko. Yeah, don't have time for that. It's also a difficult time right now. My dog is dying. She's really, really struggling. So, you know, that's tough. And so I had to deal with that this morning. And I was about 5 minutes late today. It's because I had to take care of her, and then I cut through time. And then every morning now I make a hot breakfast for my children. So I had to run over there and do all that and then run out here. And I'm scrambling like crazy. Plus business is frantic, right? There's a lot of investors around the world. I want you to think about this because you're a Forex trader. There's a lot of investors around the world that are just really upset and afraid. Okay? It's a very scary world for a lot of people. They don't know if it's going up or down. They don't understand fundamentals. Their money managers suck, by the way, because they don't get it. So all they get is sort of like conjecture and guessing and fear mongering and terrible advice like just ride it out. So a lot of people, and we're talking about big money too, they're very, very, very afraid. It's a scary world. People don't know what's going to happen. They're afraid of missing out. They're afraid of the market crashing. And there isn't clear news. But that puts you in a very good spot as a Forex trader because you're an absolute return fund. It doesn't really matter to you whether you're buying all the yen pairs or selling all the yen pairs. Honestly, it really doesn't matter to you. Most asset classes don't have that flexibility. You could be a real estate investor and you own these properties, commercial properties, and you're freaking out because in 2024, you will be required to roll over those properties and refinance all your debt, but at double the cost you've been paying. And you're like, double? I won't be able to make any money on that. And then on top of it, people are saying, well, we could go into serious recession and lots of people are going to lose their jobs. And then you're like, wait, well, that would lower my rents right at a time when I'm renegotiating a mortgage. And if I have less rents, then the property value falls, but I already got a current mortgage. Dude, I could lose millions and millions of dollars, right? People are really concerned. So where do they get their news from? Fox Business? Hey, I've been on Fox Business. Huh? But you're like, I don't know. And then they talk to their wealth manager and he's out golfing. He doesn't give a crap. He's going to make his 1% no matter what happens. If he finally gets the financial advisor on the phone, he's like, ride it out. Are you going to hedge? No, don't worry about it. No, that's market timing. So why do I pay you 1%? Oh, I'm not, so I can golf, right? So people are afraid. People don't have access to clear, logical information. And in many asset classes, they either dump everything or they just hang on for the ride. And it's a horrible, horrible feeling. But you have this capability of being able to trade either direction, risk on or risk off. To you, it doesn't matter, which is very liberating. You're completely liquid. You can have the ability to have income as well as asset appreciation. you're amazing. And if you have the capacity to sit down and talk logically with potential investors to explain the likely scenarios based on your deep fundamental research and how you would position to lower their volatility in their portfolio, you could be their hedge. You can bring less pain and more peace of mind to these traders, or to these investors. And the world needs a leader like you. It really is. People really, right now, when times are bad, people really need leadership. Sound leadership. Someone that can take the time and clearly explain things, but not freaking out that the sky's falling or freaking out that we're missing it. We're missing it. And that's the kind of stuff they get now. So there's this wonderful opportunity for you in the world. You will outperform when times are bad. And right now, times are not good. And there's a real opportunity for you. And if you're not ready to step up, you need to be putting on your hat as if you are providing that guidance now. You need to act as if you're in that leadership role now. And you need to challenge yourself to think about it and write things down and make this a real, true learning experience. If you're just sitting down here burning through trades and burning through charts, you're just kind of treading water at best, wasting your time, worst case scenario. So you need to practice being the guide. And trading as if you were a professional, as if people were turning to you, not just for advice, but to save the family fortune. Trust me, that's where your value comes from. And remember all of this, the discussion of the billionaire. They own something of value. Your very first opportunity to move towards that is you need to build an organization of value creation. In this case, what's the value? You can thread together a narrative that explains where we are now and the various outcomes of where we will be in the near future, and be able to carry that out in a sound, logical trading strategy. And you have the opportunity to be much more flexible and dynamic than any other asset class in the world. You are the greatest opportunity, and you're a thought leader, and a coach, and a teacher, and a mentor to your clients. And that's immensely valuable. And people are looking for you right now. And if you're not ready now, practice to be that person. And trust me, this ain't the last crisis to come, but you're a rare breed and people are searching for you. You are the one. Have a great weekend. I'll see you soon. Monday! Pachow! Thank you for being part of my community, everybody. I appreciate you.